All right. Can somebody give me a heads up if you can hear me? Can anybody hear me? Can you hear me? Hello? All right. Let's see if anybody can hear me in the chat. Yes, Ross, thank you. Okay. So today, I'm trying to do this new thing where I do daily recaps of my statistical edge and how I traded and all that. So every morning at 5:30, I put the highest probable trade on the chart. And at 5:30, this was the highest probable edge of the day, right? Hey, man. So we saw that there was two scenarios, right? If we could breach the London highs by 8:30, the 9:30, 10:30 highest probabilities would be 56 below London high. If we breached London highs, which we did by 8:30, then the probabilities will shift, and this was the average 10-day range. This was the highest probable. Good evening. This was the highest probability at 5:30 of the high of the day and the time frame. This was the highest probability low of the day, right? And so now, let's see how we did, right? This should have been up here as I move these around as the day goes on, right? And this was at the 45, right there, right? This was, oh shit, that's RTH. What the fuck? Sorry about that. Get rid of the RTH data. This was up here like this. Nope. This was on the 60 like that. And this was up here, right? So we got it completely wrong. But let me tell you something. The whole purpose of doing this chart, and I've said this the whole time, is not to get it right, but to be able to make decisions around and to see where the probabilities are shifting with live price. So did I get today completely wrong? Yes, I did. Did I make money today? Yes, I did. Right? But now the whole purpose of this, because remember, it's like the highest probable data is to make decisions around, and then it has to have a live price component to it, right? So the live price component are these hourly boxes, right? And they've ranged between the 9:30 and 10:30 midpoint, right? And when that breaks, it gives you heck of clues. So now we're going to go back and re-engineer it and see, was there any changes at 5:30 in the morning that we could have made to make it different, right? So we know that at 5:30 in the morning, right, when I do these, let's hide the drawings. The first step is to identify what variables Asia has done, what variables London has done to project what variables New York will do. And in the future, how it will look, it will be like this. It'll be from, Asia will be from 1800. Why is my number lock not working? By next week, I'll have all the data I need to do this. Right, will be the initial range. And so, So by next week, when I get done putting all the data in SQL and running on Streamlit, right, we'll have the 4 periods and we'll have the statistical, we'll have the ability to say, hey, from 18 to 1900, we went short and stayed short, right? London has gone short and breached that 230 to 330. And those two probabilities will give me the highest probability of what New York will do, and what New York would do will be based off of, will give me the highest probability of what New York PM would do, and then afterwards, right? But for now, my data is set up like this, and this is how we're going to re-engineer it. So from 1930 to 2030, from 03, 04, and from 930 to 1030, right? And then we're not going to use that one. So right now we can see that Asia during this range went short and had a fall. So starting with 44,180 data sets, right? Let me go over here. We said that Asia's direction was short, and that ended up being false because we breached the other side before 0230, right? So this got breached at 2200, right? So that would make this range not true but false, right? London went short and then breached this right here. And so the midline was the alert for that, and the top of that was the confirmation of it. So putting those variables in, short, false, and if we scroll down, since we do this at, 1 minute, this should be false, not true. Like that, right? So London was short false, Asia was short false. That means it breached the other side of the range, right? And so we see that right here, this is from 2 o'clock to 8:25, right? So we screenshot that. This part we got right. We'll put this at 5:30. Where the fuck is this on? So we can see, let me see why this is not working. It's not going to work for me right now for whatever reason. But anyway, we can see that is essentially what we did until 8 o'clock. We'll go to 8:30. All right, let's pause it. Let's do this. So you can see that this is at 2, and this goes until 8:30, right? This is 8:30 right here. This line right here, you can see the dip from 2, and we went down to go up, right? And so, like, from a probability standpoint, if we look, holy shit, that's why. I had my drawings turned off. So we knew that this was the highest probable outcome until 8:30, right? Let's draw this out to 8:30, like that, right? Using what Asia and London did, right? And then we know that the time-based probabilities, which are the midnight, Globex open, and the settlement, right? If we look in on this, right? Globex open had a 73%, midnight had a 73% as well, and settlement had a 70%, right? Now there's a difference between just coming over here to a midnight snap and saying, hey, what's the highest probability of a midnight retracement? It will tell you 74% out of the last 154 sessions, right? Which is cool. And then factoring in what variables Asia gave you and London gave you. So based off of what London and Asia gave us, right, we can see that those probabilities shifted a little bit, right? It gave us a 78% probability, which is higher than just using the last 198. Even though we're using 69 data sets, that 69 data set was tailored specifically what had already happened between Asia and London, right? And it even tells us the highest probable time of the day that it was going to happen, right? So if we look right here, 4 to 8, 73% retracement to midnight. The highest probable time frame between 4 and 8 would be 4 o'clock in the morning. Here is from 8 to 12. We can see that it has a 78% probability. So the highest probable time for us, based off of what Asia and London to do, would be to retrace at 8 o'clock or 9:30, right? And so forth and so forth. Just like settlement had a 71%, had a 56% probability of being hit between 4 and 8, but it had a 71% of being hit between 8 and 12, and so forth and so forth, right? Same with Globex. We can see that the highest probable time for Globex to get hit would be between 8 to 12, or between 4 to 8, but specifically at these times where volatility is injected into the markets, right? All right, so we know that those criteria were hit, and as we hit them, I'm going to delete them, right? Because we already, damn it, RTH gap stat. Let me put this on the 930. So like as we're waiting for the 930 to open up, like we know that this is going to get planted right here. Let's talk about the RTH gap. The RTH gap was the one thing that, NASDAQ 100. The RTH gap was the one thing that I do not utilize Asia and London variables for. I utilize specifically day of the week variables for those, right? We know that 930 opens up and that instantly gets filled, right? So we're going to delete that, right? And so now, as 930 is playing out, like I told you, 930 is playing out. And guys, just be honest with you, I'm not going to talk about trades that I've taken. I am a regulated employee for a sell-side organization, and I would get skull fucked if I sat here and talked about trade setups, right? Everything I do is revolved around public statistics that can be pulled by any Joe Smo that has a Google account. But when it comes to actually taking trades, like I will not talk about that whatsoever, right? So we've put our highest probabilities on the charts to make decisions around. And we know that right now, there's a couple of decision points that we're making, right? Number one, right, we are looking at, right, the structure of the 930 to 1030 in relationship to London. And we had already identified that the highest probable 930 to 1030 would be above London low, right? But now we are waiting for live price to confirm it. So this green box is the 930 on the 1 minute highlighted, right? And what I do during the 930, me specifically, is I just start drawing out the range, right? So I'll have a separate box that I just draw, right? Because I'm paying attention to a couple of things, right? I'm paying attention to this London OU line, because if we get below that, these probabilities below us increase, and these ones above us decrease, right? And I'm using the 930 as a live price indication and confirmation of that, these probabilities shifting, because I'm not going to sit here and change the probabilities every time market does something. But in the back of my mind, I know that they're shifting because I've looked at stats enough, right? So as the 930 to 1030 develops, I'm just sitting here drawing out this box, right? The one thing I'm paying attention to, let's draw it out big and solid, is going to be this 930 price and this 930 midline, that purple line in the range, right? Right. I know that previous day high is right here, and based off of what Asia and London had told us, we're going to remind me to talk about this previous 12-hour stats. Right now, we're going to talk about previous day high. We know that there's a 47% probability as of 9:30 of those highs being hit, right? Now, the moment we crossed over that London OU line, that's going to all shift, as you'll see, right? We can see that previous day low had a 27% probability up until 9:30 of being hit, right? So now we'll let it play out. We'll continue drawing our range. We're above the 9:30 price. We've taken out structure high. Let's talk about structure high. So erasing, we're hiding data, right? This is from 1800 to 06. This is the Globex session, right? The overnight session. This is the overnight high. This is the overnight low. This is the overnight midpoint. We already knew that we were heading to take that out. We already took it out, right? You already had a probability of being taken out, and that probability was, I'm not a, listen, guy, like NASDAQ, check it out. I've studied ICT, I've studied DR, I've studied auction theory, I've studied DOM, and then I got institutionally trained on how life cycle of a trade works intraday. And I realized that nobody in the retail space has any fucking clue, nor will they ever have a clue, because it's about shit that you guys will never even have access to. And I said, well, if I'm going to be a trader for a living, right, I'm not going to have access to this order flow that I currently have access to. And if I'm going to trade for a living, I might as well learn how to do it like I will when I finally retire and trade for a living, right? And after seeing life cycle of a trade, workflow, and helping design the T+1 clearance and settlement cycle and life cycle of a trade, I realized real fast and in a hurry, there's no freaking possible way that any person can track all of it at once, no matter what kind of software that they have. After talking with the CEO of the NASDAQ, after talking with almost somebody from every investment or hedge fund, like I realized really quick and in a hurry that the best bet, the most important thing I can do if I want to pull income out of these markets is to use statistics and make decisions, align historical data and statistics with live price, and make proper decisions around that, right? And then to actually position size correctly based off of my account. And that's how you survive the game, and knowing the market conditions and aligning those market conditions with the proper risk profile. So do I think ICT, you can trade profitably with ICT? If you backtest one of his models a million times, absolutely. And you position size, look, let's look at this, right? And hopefully this is eye-opening to you. This is the NASDAQ on the daily chart, right? What direction does it go? It goes up and to the right. So for me not to be consistently profitable in something that goes up and to the right for decades upon decades means three things. I'm strategy hopping, I'm over leveraged, where I can't sustain the periods of my strategy, not like going into the drawdown and not aligning properly with the market conditions. And I'm not turning off those trades, and I'm not aligning, the strategy with the market condition or turning the system off when need be, right? So the way I trade, I think you can be profitable. Look at Oliver Kell. He used 2 EMAs and won the Equity World Trading Champion by 941% with 2 EMAs and proper position sizing and sticking to his trade strategy. I've seen plenty of people who use ICT, right? The worst thing you can do as a trader is convince yourself that your narrative of how you think price moves is the only way, right? The best thing you can do is say, for example, ICT traders always say liquidity gets grabbed above highs and lows, and stops are being ran. Well, I've been doing this for 4 years now, institutionally, and I've never seen big fish ever use stops or take profits. Nor can they, because it takes 2 days for life cycle of a trade orders to be facilitated before the trade is even completed. But however, that's the narrative that they need to stick to the trade plan of once the previous day highs is taken, if I see a reversal pattern, take it and run this my trade to this low and this low and this low. That's what you need to tell yourself that it's rating stops, and that's what gives you the confidence, and that's the perspective you want to take. Have at it, dude. Stick to it, and do not let any other trading strategy tell you that there is anything better than that, because that will get you profitability, right? And consistent profitability. However, I know better, because I know it's based off of broken orders. 60 to 70% of orders that are broken, and they're just underwriting, right? That has to be voided out, et cetera, right? But none of that matters, right? Me personally, I like using statistics and live price to make decisions around, right? So going back to this, right? So it's 9:30. I'm seeing, is price strong enough to make it to previous day's highs, which was right here where it says PDH. It has a 41% probability of getting hit between 8 and 12, right? And right now it's 9:30 open, and I'm looking to see if it's going to get hit, right? We're above the 9:30 price, right? You see how it says 9:30? That's the 9:30 on the 1 minute, right? And this is the current opening range. And I'm paying attention to how we respond around this midline and this 9:30 price to see if, are we going to reach up? We've already taken out this 92%. Can we reach up and touch 75 in the previous day's highs and stick with the average daily range, which I had projected going up, right? So we spent the first 30 minutes, majority of the time, in that 9:30 range, right? We breached the 9:30 range, and we breached the midpoint, right? So right here, right, this is a failure. Let me make sure I'm on the 10-minute. This is a failure to make it to the previous day high, right? So the way I look at this, oh yeah, that 5-9 box is a good hint. wasn't it? I'm not going to talk about that yet. So if I see that we reached up and got really close to the previous day high and we're already filling it and we got below the midpoint of the opening range along with below the 930, then in my mind, I'm thinking on a daily chart, like I like to keep it stupid simple, right? That we reject it from the wick and that was the high of the day scenario, right? However, it still has to confirm it. We got below that London OU line, right? Remember what I said? That means probabilities are going to shift, right, to the downside. And so now, if this is going to work out, right, we need to get back. If our highest probable trade, because remember, this was all built off of statistics, and this was the highest probable trade to make decisions around, that we were supposed to come down, establish the low of the day between 9:30 and 11, points between 0.7 and 1% of the Globex opening price, and then we were supposed to turn around and go long, right? And this should have been lower. This was lower, right? And we were supposed to make the high of the day between 15 and 16, right? That's what data told us, right? However, right now we have our first identification of live price saying we don't give a shit about what the highest probability is going to be. We're going to do our own thing. You had said in the morning that it was going to be a choppy open. I mean, it was a choppy open, wasn't it? Like, it doesn't get more choppier than that. Like, this is the 930. This green box is the 930. It's 10:12, and we're just now leaving that 930 price. But now we have our first clue, right? We're over. We've retraced. We've got rid of the RTH gap, right? We got rid of structure high, Globex open. We retraced to it, so that's non-existent. We got rid of this projection, 92% probability, so that's out of here. Structure high got hit, right? Midnight got retraced to. Settlement got retraced to, right? And now we're below 930 price, the midpoint of the opening range, and now that London midpoint, right? Right? Up into this point, we're still online to facilitate this 930 to 1030 range that we drew up at 530, right? So, right, now we're seeing, are we going to take out structure low, right? Remember what structure low is? Remember it's the Globex low, right? So we remove all the drawings, right? This is that 12-hour cycle. We've taken out the high. We've rejected off a previous day high, and now we're trying to see, are we going to come take out the Globex low, right? And is it going to give us a reversal pattern during the opening range, right? Right now with our statistics, we can come on over here and we can say that the London was a broken model, right? So this was the projection that statistics gave us from 2 to 8:30. And now what New York did was it broke the London model, saying it broke the midpoint of that London, right? And so now we can see that, oh yeah, and that we engulfed London, right? So let's go back to the chart, right? Let's hide drawings. Well, we haven't engulfed it yet, right? But from 9:30 to 10:30, if we engulf this London, right, that's going to shift the rest of the day probabilities. And this is why I can't wait to trade for a living, so I can be on YouTube all day showing you how to engage live price with statistics constantly. It's a constant evolution. I built the database, and like the next database that I'm building currently with my buddy is going to be specifically designed for ICT traders, right, to help them. But like basically it's going to be from 1800 to 1900 will be the Asia, and then whatever variable it does until 2 o'clock. From or 2:30. Then from 2:30 to 3:30 will be the range, and whatever it does from there to 7 o'clock will be the variable that the data picks up on. And then from 7 o'clock to 8 o'clock will be the range, and whatever it does until 11:30 will be the variable that we pull probabilities from. Because remember, like, we won't do that. But yeah, like that will be coming out in the next 2 weeks. All right. NASDAQ, hit me up, man. DM me. All right, like this is my Twitter. Where's my damn Twitter at? Like, listen. There's 3 phases. 3 phases. You got your education phase where you sit there and worship the shit out of a guru, furu educator. Then you have to test that furu, guru, educator by, testing what they taught you, and that's the back test, right? And during the back test, you back test, forward test, and start designing a risk profile for that trade strategy. But by this point, and all this is doing is getting intimate with yourself, right? And intimate with that model, right? And all you're trying to do is get distance between your educator and you as a decision maker on the charts, right? When you're in the testing phase, you're saying, educator, get away from me. I need to learn how to do this on my own. You taught me. Now I need to test it and see if I can properly make proper decisions through time with what you taught me. And then there's the trading phase, which turns into the compounding phase. And that's where, the discipline lies, right? Most people will go from education phase straight to trading phase, and they'll always be codependent on that educator. That's not good. And that's why most of them just fizzle out, right? Or they'll skip little steps during the testing phase. They'll go back test something and right? Let's draw this out because I know a lot of ICE traders watch me, and so this is going to be a breaker, right? At one of your high times of the day, right? The most retarded breaker I've ever seen. All right, so this is your breaker, right? And right, they say you're supposed to, go from the manipulation leg, and then you have to sell right here above 50%, which puts you in premium. And then your risk to reward should look like this, right? And you should target whatever down below you're targeting, right? Most of you guys will get stuck in that student education phase, and then you start going into the testing phase where you sit there and test every breaker. Let's say we ran previous day high right here, right? And you say, and this was the risk to reward that was given to you, right? They said, place your stop above this high, enter right here above 50%, target blah, right? And you blindly trust them. You blindly trust this risk to reward. This risk to reward is something that as you are testing this piece of strategy, you should be testing every time it fails. Did it work eventually? Did it come up here and then go to target, right? And if that was the case, how many handles or percentile away was this high every time and building that reversal data? And then if this was your TP, right? How many times after you hit TP did it continue going? And so you're building a risk profile. And then what time of the day did this happen? And that's the only time of the day. If that's part of your trade plan, like to trade between 8 and 9 o'clock or 9:30 to 10 o'clock, then that's the only time you test this theory, right? And NASDAQ, I will send you a couple of videos I built on this so you can start building your independence. Because remember, the most important part of the trading consistently isn't putting the historical data on your charts. It isn't identifying live price. It's aligning the two together through time. And remember, it's making decisions based off of the market condition that it's given you and aligning the risk profile with that, right? All right, so now we're still online with keeping the highest probable trade of the day, right? We said from 7 to 11:30, that's what this was. We expected it to 9:30 to come down and make the low of the day between 9:30 and 11, right? And then to do a reversal and recover, right? Remember on this morning's stream at 5:30, we even said, we even looked at the previous day midpoint, and we said based off of what Asia did, what London did, it said that we should be targeting like way low down here, right? Right below the previous day midpoint, right? That's what it told us, right? Statistically, right? And so we're still online with that, right? So our 9:30 range is our first thing. So we expected all this stuff to get hit, right? Right here is the opening range that we had, right? This was the previous day midpoint right here, right? We had a 41% probability of hitting that, and that was supposed to be where the reversal happened, right? For the 9:30 to 10:30 range that we drew out, right? So far, everything's on point, right? And now we're in our low of the day zone, right? Right? Exactly what we had. So now, live price. Remember this exercise I told you guys to go back test? Like how many times the RTH is the range versus the directional with pullback versus the directional with no pullback? Right? Now we're trying to see, is the next hour at 11 o'clock, right now it's 10:30, right? Is the reversal going to happen? And we're going to use these hourly boxes to check, right? And what happens? We just completely reversed, blew right through our low of the day zone. So this is over 1% off the open to the downside, right? Low of the day between 0.7% and 1% between 9:30 and 11. So we're still on track for the right time. And even if we put the 7:30 to 11 distro, remember over the last 45 Tuesdays on average, on a Tuesday we moved 1% between 7 and 11:30. Like we just blew through that in our low of the day zone, right? So now we're waiting for the next hour to confirm. Oh yeah, and while we're doing that, we're going to be looking at our database. We saw that engulfed, right? And so what price goal it gives us, it says that we're going to continue going lower into 1120 and then completely go into a range of market, right? And now we can say that, because I think it's after 10:30, so we can say it's going to be short, and that New York engulfed, right? So it says that we're going to go short, stay short, go into a range, and then have an end of the day drop, right? And we could identify that as early as, what time was this low taken? At 10:10. So at 10:10, we had the first drop. We already knew that there's a high probability of this short happening after 10:30, right? But then at 10:30, we continue going lower. We knew that this was the highest probable trade scenario for the rest of the day, right? So we knew that up into this point, like this is kind of like what we're looking at right here, right? We drop, then we go into a range for the next 3 hours, and then we drop again, right? And the only way this was going to work is if, and I think I talked about this on the stream, right, is if from 8 o'clock, 8:30 to 9:30, we came down, made the low of the day, and then we were like coming up on our projection for 9:30 to 10:30, then this would have been the highest probable trade, but we already messed that up by coming down on the 9:30, right? So this is the highest probable rest of the day for us, right? And we've already disrespected. We already disrespected our low of the day, and now we're coming. Now we're paying attention. Does price have enough strength to come down to previous day low, right? And then if it's going to reverse, we're going to use these hourly boxes to see the reversal on, right? So we took out previous day low, and now it's about to be a new 15-minute candle, right? And we'll trend down right now from a market condition, obviously, right? New hour open, we're saying, can we get above previous hour midpoint? Step above and find footing on the 5-9 box and get above previous hour midpoint to do a proper reversal, at least to get to the 9:30, right? Even though we know that the highest probable trade is that we range for the rest of the day and then have a drop off in the afternoon, right? From a statistical standpoint. But remember, live price always gets a say. And we know that this wasn't the case. And where the heck are my 5-9 boxes? Dude, this is so wacky. Sometimes my 5-9 boxes work and sometimes they don't in replay mode. So I'll manually draw this out. This is minute 5 to minute 9. Right? And the reason I use 5-9 boxes is because they're constant. They're a constant variable, right? And I can see if I'm looking at is price strong enough to get the previous hour midpoint, I can see the relationship. It tried once, it tried twice, and now I'm expecting it to swipe down and take out these lows because it's failed 2 times going to that midpoint. And we can see that we're doing the same thing that the pricing model told us. All right, let me see. Cal SEO. Do you think there is an extra confluence in filtering out data from years that have the same day of the month with the day of the week? I never even thought of that. I usually don't look at data before 2018 for a reason, but like, that's a good idea. I don't know. Like, when I start my daily data set, I remember just putting in 4 variables, Asia variable, London variables, and what New York's done. I went from 4,180 days to 27 days. So I don't try to filter out too much of it, right? Just the prominent, dominant things that has happened that matter, right? And that's what live price has done during those kill zones or during those time periods, during those markets. And so we can see that we tested this previous hour midpoint. We stepped over it just to fill it. So if I drew out this yellow line right here, we can see we're rejecting that, right? We've already taken out the previous hour low, and now we're rejecting this previous hour midpoint. And remember what I said about 11:15 to 13:15? Over years, that's the highest probable time to sit there and range, right? And we're going to talk about that in a little bit, right? And like I said, based off of data, we're just sticking to what we were supposed to do. We're still expecting a lower low by the end of the day, as this data graph tells us, but we're just ranging, right? So I'm going to go to the end of the day so we can talk about the different market conditions and live price. And there's that drop, and the day's over, right? So remember, right, when we did this model at 5:30 in the morning, this was the highest probability of the day. However, live price got to say, and like I told you guys this morning, I tell you every morning, right? There's periods in this day there's probabilities in there until 8:30 and then even on to 9:30 that I'm not able to update you guys on. Remember, I get to talk to you guys from 5:30 to 6:30 in the morning, right? Live price gets to always have a say and gets to trump. And as you guys saw it by 10:10, the moment we engulfed London with 9:30 to 10:30, all the probabilities went from this right here to what we actually did, right? And we knew by 10:10, right? This now became the highest probable trade of the day, right? And so, like, let's say you don't have this. What do you have? Well, you have that this just completely pushed down and destroyed all of this and came down to the previous day low, saying the daily momentum is lower. Now, you have live price using these hourly boxes saying, hey, we can't even get above this hourly mid. This hour can't stay above this hour mid or make it to this hour high, or ranging when we're supposed to be ranging, et cetera, right? So that's how that went, right? Remember the purpose of the right side is the highest probable trade in statistics and levels. The left side is live price, getting a say, right? And what if it's going to respect this, right? So now, remember, most of you guys have no reason to intraday trade with more than one mini, right? And so now we know that there's three types of market conditions, right? You've got trend, you've got range or consolidation or built-in value area, whatever you want to call it, and then you have reversals, right? Right? A trend is illiquid markets moving from liquidity to liquidity, right? Oh, we won't even utilize the word liquidity, right? From one point to another, right? How I identify that market condition is these blue boxes represent the hour. These yellow lines represent the midpoint of the previous hour or the current hour box, right? And then I use the 5-9 boxes. And then what is it telling me, right? If we can't get below the previous hour mid on this hour, and we're stepping above and finding footing on the 5-9 box, and we're doing the same thing when in trend market, right? When we're doing stuff like this, right, where we're still in a trend, and then all of a sudden we come down, we breach previous hour mid, reject the 5-9 box, and continue lower, we can consider this a reversal. When we're sitting there and our midpoints are just really tightly together, or the time of the day says we should be ranging, and is confirming it with 5-9 above, 5-9, 5-9 below, 5-9 above, or swiping back and forth like you see here. That's a range. Each style of market condition requires a specific style of risk profile to be built and a specific style of trader to be had. Does it make sense to be targeting 70 handles on a trade or 60 handles or 100 handles on a trade when you know that you're in a ranging market? No, it doesn't. If you're in a trend, right, that's a blunt trend, we can use yesterday or we can use, pre-market today or wherever you see arrows are stacking upon top of each other. Does it make sense to sit there and target 5 handles, or do you extend your profit to the highest probable, like the higher probabilities, right? So kind of like what we were talking about today, like let's say we see that our arrows are stacking like we did this morning in pre-market, right? Like we saw that V shape from 2 to 8:30, right? That statistic told us to, right? And we can see that the hourlies are respecting. So this would be the reversal zone right here, right? So let's walk through it real quick, right? So this previous hour midpoint, like this hour opens 5-9 box develops, we step above, we're seeing, can we get above this previous hour midpoint? We can. Now can we find footing on this 5-9 box? We can. So when the next hour opens right here, we're above previous hour midpoint. We're waiting for the 5-9 box to develop, come down, test previous hour mid, and we can start position sizing, not all at once, because this is not confirmed trend yet, right? Because you don't get to see all of this in live price. What you see is a confusing market, right? So this is why I tell people, you can trade, you can start a position here, right? Even though you're in a range, if you have higher probabilities above you, you shouldn't be short in the range. You should be long in the range. And then you should be managing the expectation of that range. So like we tested the previous hour mid right here. Now we're seeing, can we get above the 5-9 box, right? We've taken out the previous hour high right here. So it's showing that momentum's up. This rejection of the previous hour mid is confirming that momentum is up. And so now we should be position sizing 2 to 4 micros right in here, this 5-9 box, as we swipe, right? And then now we're just hanging on, right? We know we have until 8:30, right? 8:30, right? This is telling us to target. Remember, we had a 90. I've deleted them already. We had a 90% probability up here. We had this 75. We have this previous day high. We're targeting, right? And we're just trying to not trying. We're waiting for the next hour open, right? And now we have this will be previous hour midpoint. Is the trend going to continue? Are we going to take out this high? And does the 5-9 box give us an opportunity to continue adding to that position in a trending market? So 5-9 box is developing. We're testing the previous hour midpoint. What I see in this condition, right? We went up into this hour's wick, because remember, this is a high and this is the close of this hour, meaning that this is the wick, right? And now I see rejection from it. So for me to stay in this position, it's going to have to reject around this 5-9 box in this previous hour mid and get back up. And as it comes back up, I'll add more positions to it. And you see how many times it's rejecting? It's rejecting the 5-9 box 1, 2, 3, 4, but it's rejecting the previous hour mid this many times. It's non-decisive right now. During this kind of market, remember, you're still thinking, am I in a ranging market, right? Because if you look at these hours, 1, 2, 3, 4, 5, 6, 7, you're in a 7-hour range between 20,627 and 20,568, right? So you're just in this position waiting for it to show its hand to add, and it's about to show it, right? So as we're about to open up a new hour, right? We open at the previous hour mid, and now we're trying to see, does this reject this previous hour mid and take out this high and continue momentum to the upside to target that 90% probability that was here in this previous day high, right? All right, are there any questions? Because I'm going to cut it and I am going to go to bed, right? We recapped what happened today from the 5:30 video this morning when we put the highest probable trade on our trade, how the thought process that should have been had, how you should have been aligning live price with it, and where the crucial decision points were. And then we started going over these hourly boxes and how to align market conditions with risk profiles. And I'm exhausted, so I'm going to stop talking and go to bed. Are there any questions before I jump off? If not, I'll see you guys at 5:30 in the morning.